Bilal Hafeez joins me now, CEO of Macro Hive. Bilal, always great to speak with you. It's always a fascinating conversation, and I'm keen to get your take on markets right now. There's so many different macro themes that seem to be capturing investors' attention. You've got China still firmly in lockdown mode when it comes to COVID, rampant inflation in the U.S. We've got Europe, meanwhile, so much focus on the energy crisis and the war in Ukraine. How do you navigate today's market?
Well, I think, first of all, it is a challenge because we were previously in an environment where there was one theme, COVID, that was dominating markets. So to some extent, it was somewhat easier to try to position oneself. Now we've split into multiple different themes. But for me, the ultimate path of all of these themes, whether it's the energy crisis in Europe, whether it's inflation and then the associated Fed hikes, in the US, or whether it's China's COVID problem, all of them lead in some way to slower growth, one way or the other. And so for me, as a sort of theme, I think one theme is the unwind of risk assets, so underperformance of risk assets, whether that's crypto, whether that's equities, because from all angles, they're being challenged one way or the other.
Do you expect the unwind of risk assets to continue from here? It sounds like you're fairly bearish on markets.
Yes, I mean, it's obviously markets won't move down in a straight line. And of course, today we've had somewhat of a bounce. But overall, I think that we are still in the middle of an unwind. So there's much more downside to go in all of the risk markets. I think one thing people are underestimating is how much the Fed could raise rates. Most people seem to be thinking that the Fed will be much more sensitive to equity markets than they actually are. I think that the Fed is much more sensitive to inflation that the average household is facing. And that's by far their biggest focus. And I think they'd be willing to see much weaker equities if it means lower inflation. And then I think also, I think that the energy shock that we're seeing, people are underestimating the impact that has on the global economy. We've had oil prices, food prices at elevated levels now for a protracted period of time. And in the end, that's going to be really problematic for central banks around the world, whether they should hike, and also just for household purchasing power as well.
It's really interesting, your comments on the Fed, and I wonder if we do see a more hawkish than expected Powell, whether that will ultimately be reassuring for investors, because the chief concern seems to be fundamentally that inflation is the biggest risk, and if it spirals out of control, that's sort of worse than any other alternative scenario. What do you make of the recent comments from Powell and now Bernanke? He spoke to our program yesterday, talking about how the Fed may have been remiss in not hiking sooner. Does that tell us anything about the way they're thinking about rates moving forward?
Yes, absolutely. I think there's been a huge change by the Fed in terms of how they are reacting to the data. So, of course, inflation has been rising for about a year or so. What has changed has been the Fed's reaction function. So 3 or 4 months ago, the Fed essentially pivoted completely to say that they're much more sensitive to inflation than they were before, and much less sensitive to growth dynamics in some ways. So I think they've recognized that there's a political dynamic to all of this, that if they don't contain inflation, then that will be really problematic for them. So, all the rhetoric we're getting from Powell and former Fed officials like Bernanke is that the Fed has been slow to act. They need to act faster, more aggressively. And also Powell has been also hinting that even if it leads to a recession in the US, that may be a tolerable risk for them to accept.
There is this really fascinating dynamic that's gaining momentum, it seems, between the U.S. administration and the Fed, and who's really to blame for the inflation that we're seeing. And we just listened to, or just played some comments from Bezos targeting the Biden administration. And of course, there are many on the other side of the aisle who would also blame the Biden administration for letting inflation get to where it is. How do you see that dynamic unfolding?
Yes, I mean, I think in the end, everyone is at fault for this inflation dynamic. One thing that is clear is that the US fiscal stimulus was exceptionally large, and that for sure contributed to higher inflation. Other regions in the world didn't have the same level of fiscal stimulus and have seen less inflation than the US has. So essentially, the US massively increased demand in the US and the global economy at a time when supply was constrained. So for sure, the US administration was at fault for that. And then at the same time, time, the Fed didn't raise rates fast enough, so they're also at fault as well. So it's kind of a multi-agency problem here, where everybody's at fault to some extent for this inflation that we're seeing right now.
Bilal, before I let you go, I would love to get your take on cryptocurrencies and the crash we've seen. What you think it means for the future of crypto? Does it affect Bitcoin's future specifically? Does it influence the way institutional investors are likely to think about this space? What's been your take?
So my take overall is that I do think that crypto has some genuine use cases and is a genuine sort of technological advance, much like the dot-com period. At that time, internet stocks got massively overvalued, and there was a massive crash in 2000, in the year 2000. But the internet has changed the world. It's still with us. The issue was that the valuations got too far. And I think something similar is happening to crypto right now, that crypto in some form or blockchain technology will be with us for years to come, but the valuations just went too far. So that's number one, that it's here to stay as a technology, but the valuations are going to continue to be under pressure. And then the other aspect of this is that there are certain features of crypto, like stable coins, where you potentially earn very high interest rates while being pegged to the dollar. And what we know is that, especially in the 1990s, that when the Fed starts to raise rates, then currency pegs start to come under pressure. So in the 90s, we had the tequila crisis with the Mexican peso being depegged. We had the Asia crisis where various Asian currencies got depegged. And we're seeing something similar now in stable coins as well, with the UST, the Terra dollar stable coin, coming under pressure. So all sorts of things that have happened in traditional markets are now happening in crypto as well. And I think there's a recognition by people in crypto that they aren't some new universe, so to speak, where the usual laws of finance don't apply. They do apply to crypto as well. And I think that will lead to some caution from investors as they become more aware of the financial risks associated with the crypto markets.
Bilal, always a pleasure. Thank you for speaking to us this morning. Bilal Hafeez, CEO of Macro Hive.